welcome to Coleman Report Live. I'm Bob Coleman. We're talking Main Street and the small business lenders who help it grow. John Woodick out of Clark Street Capital is joining us. Katie, good to see you. Hope you had a nice weekend. And Lance is, what, are there storms in Arkansas? I know there's a big storm in Arkansas. Anyway, we're having trouble finding Lance. So, John, welcome. Hey, John, tell us what Clark Street Capital does.
Clark Street Capital sells loans. So we work with banks and private equity firms on portfolios ranging that we sell at a premium. So good loans, consumer, commercial, and we also deal with a lot of distressed portfolios as well.
And we're talking you'll buy portfolios. Are you involved in the PPP portfolio acquisition market?
We've done one or two. An opportunity has kind of played out because those who would have sold their PPP portfolios for the most part have done it.
Have done that. Okay, well, very good. But yeah, you're on both ends of it. And as you said, your portfolio's average size of a transaction, is that fair to ask?
Yeah, I mean, we took bids last Thursday on a $25 million pool of performing, sub-performing Chicagoland assets. That's probably average.
Are we talking par? Are we talking premiums? Are we talking discounts? I know it's all over the board, but just on a general transaction.
Sure. So, I mean, basically, when we do performing, there's true performing, which is another bank or credit union or securitized lender would buy the loans, and it's typically a part of premium sale. Plenty of the distressed portfolios are performing, but they're not bankable. Borrowers that are hanging around, but they're at 0.8 debt service coverage. So those are not par deals typically.
Yeah, great. Well, John, thank you so much for joining us. By the way, John, I'll give you a plug. He has a great weekly blog called Clark Street Capital. Very well written. And Joseph, can we put a link on the end of that, or somehow let's get people introduced to that. But it's very, very good. Hey, I want to talk about that, but first let's go to our poll questions. Number one, we're going to ask a hard one, Katie. First of all, Katie, let's go back and review how much are we talking about here?
So the EIDL advance could be up to $10,000 depending on how much of an EIDL loan that the borrower received. I haven't heard too much pushback against removing this from the PPP deduction. I think a lot of people really want to see that removed, primarily because a lot of borrowers did not anticipate seeing that. A lot of lenders didn't anticipate that. So it really is going to hurt those borrowers in the long run and essentially make those PPP forgiveness moot. It's really not going to be as helpful as what people expected.
Well, especially now that there's tax implications on this. And as you can see, 92%, we thought we'd ease into the week with an easy question. So I'm sure that doesn't surprise anybody. John, I'm sure you're not surprised by that result.
No,
John,
it seems like a no-brainer for the banks.
No, hey, Lance, welcome. Are you with us? Nope, Lance isn't with us. He's on a delay, or he's muted, or whatever. Poll question number 2. Okay, we said please read the poll questions out loud for those listening over the phone. It was, should Congress remove EIDL advance? Number 2, do you see interest rates remaining low for the next 6 months? Yes, no, I don't know. John, I'll let you weigh in first.
I mean, the Fed basically said rates are going to stay low for the foreseeable future. So I did notice that Fannie and Freddie are charging a 0.5 point fee on mortgage loans starting December 1st. So residential mortgage rates may creep up a tad, but overall rates are going to be pretty low for a while.
John, we're going to have you talk at our secondary market summit about the outlook for 2021, specifically from the political standpoint. Do you see a Biden SBA administration affecting interest rates or affecting SBA very much? Give us a sort of a quick elevator pitch on what you see happening in 2021.
With respect to SBA?
Yeah.
I mean, everything regarding SBA is, very popular and very bipartisan. For example, anyone complaining about PPP and what Congress wanted and should these companies have gotten PPP loans, there was not one single member of the House or Senate that openly voted against the CARES Act. So if that's not bipartisan consensus, I don't know what is. The Republicans and Democrats are in unanimity almost on expanding PPP and so on. So I don't expect many changes. I do have some concerns that when you see an uptick in defaults in 7A, when these payments wear off, that there might be some pushback on the lenders, but that's probably 3 to 6 months out.
Okay, yeah, very good. What are the poll results, Joseph? Yes.
Who's the 1%? Who's the 1%? I got to sell some loans to them.
We have sometimes we have a fat finger response, but 97%. That's pretty overwhelming number that people say, hey, we don't see it moving. Katie, is that in line with what you're seeing out there in the marketplace?
Definitely what I'm seeing. I haven't read too much about this. I think John's probably far more experienced in it, but from what I'm seeing, that seems like what everybody's saying.
I'm going to amend this question for 2021. Are you selling your SBA 7A and 50 loans to the secondary market? Let's be specific for what is your plan for 2021? Appetite by investors, John?
Yeah, I mean, we've done a number of 504 sales. They've gone very well. I will say that hospitality in particular and retail are very toxic. And, hard to find banks that will touch those loans right now.
Okay, I'm going to have you define toxic. What does toxic mean?
Means that you could bring a 20% LTV loan on a hotel in Georgia to a bank in Georgia, and I think everyone would not even consider it. So there's just certain segments are going to be challenging. Retail isn't quite as prohibitive, but I keep hearing from friends of mine who are CRE lenders, and they can't get a retail deal done in their bank. So it depends on the property type and industry.
What do you see happening for construction? Do you see that way off as well?
The good thing about construction is, you're obviously looking to the future, and you would think that people go plowing ahead with a project, believe it to be viable. I think what's tougher is, in this cycle, to mostly credit, banks kept funding these projects, even if they seemed irrational. There was a property in Vegas in the last cycle where they had like $800 million into it, and they stopped funding the project, and it was 100% loss. So It is a better idea to finish these projects. I guess what's tougher is you've got a hotel or something in a COVID-impacted area that's scheduled to open in 9 months. When does that asset get stabilized for an investor to want to purchase the 504 first at a premium?
Well, as I've said before, John, the difference between this crisis and the financial crisis of the Great Recession, there was no capital to be had. We tried to do a little stimulus, but the theory was, hey, we're going to stimulate Wall Street, the big AIGs, the General Motors, we're going to bail them out. This time around, the decision makers said, well, let's put the money directly into Main Street through PPP lending. I know it's way, way, way too early, but do you think that was a good approach?
Well, let me be positive.
That's an easy question. See, we started with our interest rate's going to rise, and now we get to.
Let me just kind of give you overall. Do I think it was a good idea that Congress and policymakers act decisively to provide credit, to provide money to the economy? Yes. Having said that, now that you start to look at a postmortem on, say, PPP, there's an old Woody Hayes quote that when you throw the football, 3 things can happen and 2 are bad. Well, I would argue when you make a PPP loan, there are 4 things that can happen and 3 are bad. One, it went to fraud. We can all agree that fraud was a bad outcome. Two, it went to a company that never needed the money. All he did was basically line the pockets of the shareholders. Three, it went to a company that was going to fail anyway and subsequently failed. So you're sort of left with, which is the largest block of PPP loans.
Well, I was going to challenge you on that. What
Correct.
percentage? Yeah, and you're right in all three of those, but I sort of take the tack that, yeah, we have issues, but John, what would have happened if we didn't have the PPP funding for that fourth bucket?
Sure. Look, I think it was good that we did something. I mean, I think the cost per job, they're estimating around $200,000 per job. I mean, that's expensive. It does seem like the new PPP bill is more targeted. It's targeted to companies that have shown a real revenue decline. So it definitely sounds better than the first sort of let's just throw a bunch of money at it solution.
John, I really appreciate your feedback and your thoughts on this and great discussion on that. Katie, what's going on in Congress? My eyes are starting to glaze over. I hear things of passage and then vetoes and then daily phone calls. Give us an update. Where are we on Monday, December 14th at 2 o'clock Eastern?
I think I need to walk through really what's happened since Friday. Friday, Trump signed the stopgap, which prevents a government shutdown. Some congressional members wanted to include COVID relief in that, which would have maybe included additional funding for PPP, but that didn't end up getting added to that. So that was simply a stopgap, which means this week they will be addressing the spending bill, and they need to be handling that as well as discussing the funding for COVID relief, for small business relief, things like that. There was talk about combining the two still, but it sounds like they do want to separate that just to make sure that we can still address both of them, because it looks like one is more likely to pass than the other, or if there's any kind of contention, they don't want it held up. So right now what they're talking about is over the weekend, it sounds like Congress was addressing both issues quite extensively, working late into the night. Mnuchin said that they were in some form of agreement on a $908 billion stimulus bill, but it sounds like that will probably be revealed this evening and addressed later this week.
Yeah. And it's, as I said, when this breaks, we're really going to be rocking and rolling in terms of guidance and the details. The good news is, John, they're talking. I haven't, as you said, when you had your opening comments, I haven't heard anybody get up and rail against, they're going to vote against some type of stimulus. It's just getting the two sides together.
Correct. Yeah, I mean, I just think that, you keep thinking there's a deal, and obviously three parties have to be on the same page: Mitch McConnell, the White House, and Ms. Pelosi.
Well, that's it. Hey, I want to talk about part of your band report, one of your sublines. We'll hold off on restaurants. Restaurants, we are toxic. We'll leave it at that. But you have a subheading on mortgages rock, which I love. Tell us me about that. What are you reporting on mortgages?
Yes. So back in March, I thought I was brilliant in refinancing my home mortgage. And I think at the time I was, 3.25 with an arm that was coming up in 5 years. And I said, oh, I can do a 15-year fix at 3%, and did the closing, saved a bit of money. And then I'm refinancing again for 2.5% fixed for 30 years. I mean, really, 2020 is the best year for mortgages ever. It's never been better. And I would say the quality is quite good. I don't think the banks or the mortgage originators are the 2003 numbers probably include a lot of junk, but the quality is pretty good. And look, if you're a bank without a mortgage group right now, you really missed out on a great way to generate fee income. I think that opportunity will last probably well into 2021 and 2022. There's still going to be people having refi. You're starting to see more purchase money transactions. I think the refi percentage for 2020 was the highest in history. But you know,
You know what that percentage? You know what that percentage?
yeah,
is?
it was. Funny you should say that. It was 65% of all originations were refis.
Wow.
But that should be. And one thing I mentioned earlier about rates is there was a 50 basis point surcharge that Fannie and Freddie put on mortgage origination starting December 1st. That's basically a COVID tax to account for the probably higher likelier than average defaults.
Real quick, what is the Financial Stability Oversight Council and what are they telling lenders?
So FSOC was this massive group. It's like, you know, it's like the 5 families of the 10 families. You got the OCC, you got the heads of the OCC, FDIC, Credit Union Administration, Federal Reserve, you know, even
You don't want to be a target. You don't want to be a target of them, I assume, is that what you're going to say?
Well, when they say something, I mean, it's pretty much as close as you'll ever get to unanimity amongst regulators. And they publish their annual report. Every banker should read this, or at least read the summary, or get our blog so you can see my summary. But you know, they had a couple areas that they're concerned about. One of the areas is corporate credit. You know, as someone who also does some trading in distressed bonds, the pricing for you know, bankrupt companies' bonds are like, in some cases, no one's seen pricing this low. Certainly some of that was a reflection of the loose credit quality, but look, there's an awful lot of corporate debt that's been downgraded. The Fed's been propping that up by buying some of those fallen angels. That's not going to last forever. And, you know, you have, I can name you 30 prominent bankruptcy filings. So, you know, obviously they're worried about what's going on in corporate debt. And obviously that sort of extends down to really all Cni lending because, you know, that's probably similar to SBA lending in some degree, except SBA lending, you have a guarantee.
I know there's someone out there who doesn't know what you're talking about. What is a Cni loan?
Commercial industry loan, it's basically a loan to a business. It can be secured by real estate and equipment, but it's basically a business loan.
Very good. What we'll do is we'll attach that. How large is that summary, John?
It's a couple paragraphs. I mean, you want to chat about what they said about CRE?
Quickly, yes, go ahead.
Yeah, they were particularly concerned about the hotel, retail, and office segments. While there's a variation in different institutions' exposures to pandemic-driven CRE stress, a sizable proportion of CRE loans is currently held on bank balance sheets, with small and mid-sized banks more likely to be concentrated in CRE. Distress in CRE properties makes these creditor banks vulnerable to losses and write-downs with potential to tighten credit and dampen the economic recovery. There were a few other recommendations, but I felt CRE and Cni was probably most relevant to this audience.
We'll follow that. We'll get those. We'll post those on tomorrow's GoToWebinar chat. Joseph, you make sure you take care of that. We're cleaning up some things. Reason we asked about the idle advance, Katie, is what 45 associations are pushing to remove it. We think that'll be done in the final legislation. We think that, John, you and I didn't talk about the tax implication of PPP, but we think that'll be resolved as well. And obviously we'll see what happens on that. Lance is doing a webinar on Wednesday on the new SBA SOP 5053, sort of following up on what John's saying in terms of enforcement actions and what SBA lenders can expect in 2021 from an SBA review, but John's also opening up possibilities of, well, we do know the OCC and others are very interested in these SBA loan portfolios, and I suspect with all the news, they will be interested in PPP portfolio.
The big question I have, Bob, is, you know, if the defaults for 7A become, you know, large, you know, double digits plus, what does that all mean? I mean, does Congress say, no, we understand, that's fine, lenders, you're doing your job? Or do they say, oh my God, why did you guys make all these bad loans? And did you make a bunch of subprime loans to borrowers that shouldn't have gotten these loans? I mean, that's a big question. I mean, we do expect an uptick in 7(a) defaults next year, and what does that all mean for the industry?
And also one of my favorite programs, Community Advantage, you're going to see an uptick on those. Those are the smaller loans, which do a lot of good, but you're going to have higher losses in that segment as well. So hopefully Community Advantage lenders are not unfairly scrutinized compared to other PLP lenders. Hey, John, I really appreciate you coming on. I think we've already booked you for 2021.
Yes.
Can't wait.
I always appreciate the opportunity, Bob. Hopefully I was helpful to your audience.
Oh, you very much. And we got some questions. We'll hold those over tomorrow. Katie, good to see you. Lance, hopefully Lance will come in out of the snow, the cold, and we'll see him. But thank you all for joining us today for Coleman Report Live and for supporting America's Main Street, one entrepreneur at a time.
Have a great day.